Good evening, Mohan sir. Good evening, Ravindra sir. We are on live now. Sir, over to you, sir.
Thank you, Biju. Good evening, Ravindra sir. Good evening, all dear aspirants. Good evening, Biju. So very crucial time is passing because now tomorrow legal and regulatory aspects of banking exam is there. Most of those who are joined are about to clear JIB tomorrow, and they can go for CAB this year itself. So I'm not taking much of the time because the time is very precious. And today we'll be discussing about the important points. Mainly it will be one-liners only, so that you will be listening to our very senior faculty, Ravindra sir, is a retired assistant general manager from Punjab National Bank. And today's class, whatever he is discussing, definitely it will be remaining in your mind. And tomorrow, when in the exam, when the questions are asked from this, definitely you will be in a position to recollect and give the correct answer. So that is the purpose of this class. IBS specially has scheduled this for supporting all of you in the last minute also. So with these words, I warmly welcome our beloved Sir Ravindra sir on behalf of all those who are joined and IBS to this class. Sir, welcome sir, and now it is over to you, please.
Thank you, Mohan Valithan sir, and thank you, Biju sir. Dear
you,
friends, this is a doubt clarification session. If you have got any doubt, please ask that. Then you can post in the chat box. I will attend to that definitely. Whatever questions you are asking, I will definitely attend to that. And finally, what if we have got some more time, we will just have a revision or whatever ABCD quick revision if possible. Otherwise, you post whatever doubt you are having, so that once you are posting the doubt, so once it is clarified in the group, all those who are there, that will be beneficial to them. So tomorrow is very crucial day, as rightly pointed out by our Mallithan sir. And those who have scored something between 45 to 49 in the other two sessions also, it is much more important, because in legal you can easily score more than plus 60, 65, 70 marks like that, because most of the questions will be direct questions. You can answer that questions. Only thing, you have to read the question thoroughly. Don't confuse. You have to read the question thoroughly and then answer. So any doubt, we can ask a doubt on any module. Simple mortgage and equitable mortgage. What is an equitable mortgage? When the Britishers came to India, they started this equitable mortgage, English mortgage. Just 1 minute. The question is on simple mortgage and English mortgage or equitable mortgage? Okay, English mortgage. At that time, that was only available for those Christians. It was not available for Hindus. It was not available for Muslims, and particularly it was for government, this property and other thing, which these Britishers, they can take it, and also for Christians. It was not for other communities. And here it is a gentleman's act. So English mortgage is a gentleman's act. Just they are transferring that in conditional sale. There is a condition that it has to be transferred back. There is a condition already there. In English mortgage, there is no condition. They are transferring that property upon an understanding. There is a gentleman's agreement. There is no written agreement. There is a gentleman agreement that the property will be transferred back. But a simple mortgage, there is no condition, nothing. It is just full transfer of the title of the property. In English mortgage also, they are transferring the right, but there is a clear-cut gentleman agreement that once the amount is paid, it will be transferred back. Bill financing, see specifically you say, instead of SURFACE Act, I can start A to Z a full day, 1.5 hours, I can discuss on SURFACE Act. But that will not serve the purpose. You just ask a particular topic. If you are saying, I can definitely do. Okay. So SURFACE Act, I can start from ARC, how to form an IRC, what is securitization, what is asset reconstruction, what are the procedures to be followed in SURFACE, where you will not get a right, what is the SURSAI, like that each and everything, if I start telling, the time won't be there. Specific point which you want to discuss, definitely I can ask. I can give you the reply. Okay. Asset reconstruction is, suppose in SURFACE Act, there are three things. It is not a paribas charge, it is pari passu charge. Bharani Devi, you have mentioned paribas, it is not a paribas charge, it is pari passu charge. Pari passu is a charge where there is nobody getting priority. Everybody is on the same footing. Pari passu, same charge, same platform they are there. It is, suppose it is mainly in the consortium loan and also in the case of syndication, where the single document, the property is single against which so many banks are giving loan. That security charge creation will be done based on the same proportion of whatever loan they are given. If one bank has given 40%, they will get a charge on the property 40%. That is pari passu charge. Nobody is getting higher grade. Everybody, whatever loan, same ratio only, proportion only, they will be getting amount. That is a pari passu charge. Second charge is, if anything is left over from the first charge, anything is left over, first bank will take the entire amount for their whatever amount is due, everything they will take. Any amount is left over, that will be transferred to the other person. Subrogation is stepping into the shoes of the other person. Where the subrogation will happen, suppose there is a loan given to a customer, bank has given a loan to a customer, it was guaranteed by the guarantor. There are three parties in that case: bank, borrower who has taken the loan, and the guarantor. Suppose the guarantor is not making the payment. As per section 128 of the Indian Contract Act, the duties of the guarantor and the borrower is co-extensive. Their liability, their responsibility is co-extensive, same responsibility. So bank can directly recover the amount from the guarantor. But in that case, if the bank is recovering from the guarantor, in that case, the guarantor will get all the right which was earlier held by the bank. So whatever the bank is having the right over the borrower, now since the guarantor has made the payment, the guarantor will have all the right over the borrower, whatever the bank was having. So he is having all the right which was earlier enjoyed by the bank. That is called subrogation, stepping into the shoes of the other person. And again, in the case of insurance contract, suppose I have insured my vehicle. So the insurance, there is another car hit to my vehicle and there was a damage to my vehicle. So the insurance company will make payment to me. But my right to file a case against the other party who he is responsible for the accident, that right will be transferred over to the insurance company. They will get all the right which I was having earlier to file a case against the person who is responsible for the accident. So this is subrogation, stepping into the shoes of the other party. Limitation cases, normally it is 3 years. Any limitation, normally it is 3 years from the date of the document. From the date of the document, 3 years. But in the case of a mortgage of immobile property, then there is 12 years time is there. 12 years time for sale, for this mortgage property to be sold. But any case to be filed against that borrower or the guarantor, the time is only 3 years. After 3 years, bank will not, if it is taken to the court as proof, bank will not accept it as a proof. That is the only thing. His liability will be there. Only thing, bank will not be accepting that as a proof. So for foreclosure, in the case of conditional sale, there is a case of he has to transfer it back. Normally, conditional sale, he has to transfer it back. But the mortgagee can file a case for foreclosure within 30 years. 30 years time is there for him. In the case of usufructuary mortgage, the possession is handed over to the mortgagee. The ownership is with the owner only. Ownership is not transferred. Only possession is transferred. The owner of the property, since he has transferred the ownership, he can file for redemption, taking back that within 30 years. If that is not done, then automatically the property will be transferred to the other person. Normally, it is 3 years. If you are saying any specific cases, I can explain more. And the 3 years starts from if there is any deficiency. If that person is a minor, the 3 years start from once he becomes a major. And if he's an insane person, once he is overcoming that deficiency, then only 3 years coming. If the person has gone abroad, that period will not be counted when taking into counting that total 3 years period. The date on which the limitation period starts from the next day of the documentation. It is not from the same day. From the next day on the documentation, the 3 years period will start. And if the completion of the 3 years period, the court is on leave, then next day when the court reopens, that day time is available. What if a check dated 31/6 is presented for payment? If the date is 31/6, if it is presented by payment on 1st July, there is no issue. You make an impossible date, 31st February, no issue. You make the payment on 1st March, there is no issue. But post-dated check, if it is paid, then the drawer can file against you. They can complain against the banker. But impossible date, after that date, any day it can be paid. Doctrine of ultra vires. What is a doctrine of ultra vires? If anything is done as per the doctrine of ultra vires, it is treated void ab initio. What is void ab initio? From the start itself, it is not valid. What is valid contract? A contract which can be enforced through court is a valid contract. In the case of doctrine of ultra vires, it becomes void ab initio. What is doctrine of ultra vires? In the memorandum of association, everything is mentioned. What is the purpose? Objective clause is there. Suppose that company is doing banking service. So the company specifically started as per the memoranda of association. The objective clause is mentioned as the company will do finance. Okay. But subsequently this company management entered with another person for trading purpose. But this is against that objective clause. Even if that person engaged with this company and he incurred loss, he cannot file a case against the bank because the clause is there. It is a public document. Memoranda of association, it is a public document. All the information is available. What is the object of the company? Then a company which is formed for financing is not supposed to do trading. In that case, the person who has entered into that agreement, he is supposed to know that this company does not have the capacity to enter into a contract where trading is done. So any loss to that, he has to bear. Company is not responsible. Ultra vires is there to support the company from outsiders. Del credere agent. Del credere agent is an agent who normally does the business. Agent is a person who does business for the principal. Here, he takes this credit guarantee also he does. Suppose he is canvassing business. so many persons he has canvassed business, he is guaranteeing the payment of the dues from all these persons. The company is given, or the firm or company to whom he is an agent, suppose it is a partnership agent, he is an agent. So he is canvassing business for that firm. So he is also giving guarantee of the payment of this payment on due date. So if any person who has purchased goods on credit, he is not making the payment, then this del credere agent, he has to make the payment. So he is not only canvassing business, he is also guaranteeing the payment on the due date. So in those cases, he will get some additional commission, which is also known as del credere credit. Constructive notice, that sometimes suppose in SURFACE is symbolic notice. Constructive notice as if it is a symbolic notice. You are not actually doing that. Symbolic notice is something, so it shows that your intention. Suppose in SURFACE Act, you want to, either you can take over the possession of the property, or whatever it is, movable, immovable property, whatever it is, you can take over the property. But you can put a board there, it is a factory, you don't want to take over that. If you are taking over that, entire responsibility lies with the bank. So you have to keep it safe. So you can just paste it there. That is a symbolic possession. Now this is under the possession of the bank. That is a symbolic possession. Voidable contract can be either two ways. Voidable contract two ways. Suppose, as we know, that for a contract there are so many essentials. One is there should be consideration. It should be done with the free will. If it is not done with the free will, suppose one person want to enter into an agreement for sale of the property. The owner of the property, he says, either you agree or I will shoot your son. I will shoot your son, or I have kept your daughter in confiscation. If you enter into this agreement, then only I will release her. In that case, he is signing. He is not doing it in free will. He is signing it. Subsequently, he can say that I will not be a party to that. You can make it not valid. So in that case, it is based on only one person can decide. Only the aggrieved party who is getting the benefit, he cannot do that. In this agreement, this person, other person has threatened him and he has signed. So he is the aggrieved party. He can say that I am not going to forward with this agreement. So in that case, it is a voidable contract. Initially, he has signed everything, but since it was not under free will, he can say that it is a voidable contract. That is one case. The other case is, suppose earlier I want to sell my cow. I have entered into an agreement with another person. So we have entered already, he gave me advance also. But before the actual sales, the cow dies. How I can give that cow to him? It cannot be possible. So it has become impossible to perform. In that case also, it can be voidable. Two cases. One, if not done with free will, and it is only available to the aggrieved party, not to the other party. Other one, if it is impossible to perform. Contingent credit is something, now it is not credit. So at a future date, it may become contingent upon happening of certain incidents, occurrence. That is a contingent. Now it is not happening. So, but it may happen at a later stage. Those are called contingent liabilities. All these non-fund based credit facilities, all these guarantee, letter of credit, all these are contingent liabilities.
Doctrine of holding out എന്ന് പറയുന്നത് sir, doctrine of holding out.
Doctrine of holding out. Suppose it is almost like that, the doctrine of Estoppel also. So I represent myself as an agent. There is a partnership firm. I represent myself as a partner, even though I am not a partner. I represent myself. And the third party agrees into, for just I will say another case. I'm a retired AGM of Punjab National Bank. I am sitting in a shop, and a person comes. He normally gives on credit. Say goods he is giving on credit. Suppose it is a cloth shop. He gives on credit. Normally he gives on 10 days or 15 days only, not more than that. But I am sitting in the shop. Then he says, "So sir, why you are here?" The owner says, the partner says, "He is one of our party only. He is one of our party." The other person presume that who is a partner. He has become a partner. So he gives credit as 3 months. Subsequently, after 2 months, the amount is not paid. Then in that case, he can ask me to pay, because he has done so because the presuming that I am also partner to that. I should have told him at that time itself, I am not a partner. When the other person says he's with us, I should have clearly made that I am not a party. I am just sitting there. Since I have not made that, the other person has acted thinking that, believing that I am a partner. Subsequently, I cannot say I am not a partner. There may be so many cases. Suppose one partner has already left, but he has not informed others. He was already there. He may be sitting already left as the partner. He has left the company as a partner, but he comes and sit. The other person, third party, is not available, knowing about that. They comes and deal with the partnership, thinking that he is still a partner because he is coming and sitting and he has not informed others. In that case also, they cannot subsequently say that I am not a partner in that account. He cannot hold out. He cannot say, I am not a partner. So he is liable. He is liable for any damage or happening to the other person. IBC in details, IBC is a very vast subject. What is insolvency? Just main points only I will touch. What is insolvency? Insolvency is a stage or where the company is not able to make the payment liability to meet this liability as and when this liability occurs. That is the insolvency. What is insolvency resolution? Whatever problem this company is entered having, to resolve that, to remove that and make this company a going concern. That is the insolvency resolution. Bankruptcy is court is declaring a person or a company as bankrupt. Once it is bankrupt, he cannot hold any property. Code is all the laws covering to a particular field, all the laws are kept in the same place. That is a code. We have this criminal procedure code, civil procedure code, wage code, like that. All the laws, there were so many laws, insolvency, presidential insolvency act, so many sick industrial unit. Then we had this CDR mechanism, everything clumped together and kept. That is a code. Here, the minimum amount for a corporate and LLP, there are two types, corporates and LLP, then corporate insolvency resolution, and others, that is our individuals and partnership comes in the other one. For a corporate insolvency resolution, minimum amount, default amount should be 1 crore. Then only it can be filed in the IBC. IBC, there are 4 pillars. First one is the insolvency professional who take care of the company during the insolvency period. Then second one is the information utilities who provide all the information as and when required. The third one is the adjudicating authority. For the corporates and the LLPs, it is the NCLT, and their appeal is NCLAT. Individuals and partnership, it is DRT, and appeal is DRAT. And the fourth pillar is IBBI, Insolvency and Bankruptcy Board of India. So these are the 4 pillars. And now there is a new system also added, that is the pre-packaged insolvency resolution plan for MSMEs. MSME PARP, pre-packaged insolvency resolution package. There the minimum default amount is 20 lakhs. In normal CIRP, corporate insolvency resolution plan, the entire possession and the control will be with the committee of creditors. Committee of creditors normally the financial creditors, banks and financial institutions. If there are no financial creditors, then only it will go to operational creditors. Otherwise, financial creditors will take a control of the company during that insolvency resolution process. This insolvency resolution professional, they will manage on behalf of this committee of creditors. Committee of creditors, minimum any decision to be taken with a 66% majority in value. Voting rights will be given to all this committee. If there are some 10 banks, depending upon their how much loan they are given, the voting right will be given. Depending upon that, 60% should be there. If within 180 days, if they think that insolvency resolution is not possible, again I am repeating what is insolvency resolution: bringing back this company into a going concern. They may change the management, they may sell some subsidiaries, some divisions which are making huge losses. Whatever way they want to do, this is done insolvency resolution to bring it back into the going concern mode. If that is not possible, then it will go for liquidation. So 180 days is normal time required for submitting this proposal to the adjudicating authority. It should be with a 66% minimum committee of creditors consent. Once it is given to the adjudicating authority, they will go through that, and if they find that this okay, this can be resolved, then the resolution process will start. They can extend it normally 180 days plus 90 days can be extended. Maximum 270 days, including any court cases, everything. Maximum time frame is 330 days, not more than that. So if resolution process is not possible, then it will go to liquidation. This PIR, this MSME, it is 10 crores is the minimum default amount, not 1 crore. Then in the case of housing loan, big projects are coming, the application can be minimum 100 allottees or 10% of the total allottees. A check crossed not negotiable is still transferable. Okay. The difference between if you are making the payment not negotiable check, the bank can pay. There is no issue. But there is any problem in the subsequent transfer, then bank will be held liable. So since the intention is very clearly mentioned that not negotiable, even though it is negotiated subsequently and passed, if there is any problem with the subsequent negotiation, bank will be held responsible. COPRA, it is the new amendment only. As per the latest one, as on 30th December 2021, there is some changes which has happened. So main changes are district court. There, earlier it was 1 crore. Now it is only up to 50 lakhs only, their power is there. Earlier it was 1 crore, now it is only 50 lakhs. Then state commission, earlier it was above 1 crore and up to 10 crore. Now their power is only up to 2 crore, not more than that, up to 2 crore only. And again, there is a lot of changes in this banking ombudsman scheme also. In your IABA site also, they told this latest one will be coming. What is the latest change? This is integrated banking ombudsman scheme. Integrated banking ombudsman scheme has come from 12th November 2021. IABA site also, they mentioned about that. Here, what are the main difference? Earlier, every banking ombudsman was having jurisdiction over a particular area. Now that is not there. So there is no separate. You need not give complaint to, if you are in Bangalore, to the Bangalore ombudsman. Not required. There is a centralized processing cell that is in Chandigarh. You can directly give a case there. Again, few changes, not more changes. Earlier, the appeal was to the Deputy Governor of RBI. Now, presently, it is to the Executive Director, not to the Executive Director. Earlier, in all the controlling office, there was a designated officer who will be dealing with that. Now, since it is centralized processing center, the designated officer should be a general manager at the head office. No regional office, circle office, they will not take up. They will take up only with the head office general manager, who should be a designated officer. Another change is, earlier maximum up to 20 lakhs, up to 20 lakhs amount any claim is there, that only they can submit up to 20 lakhs. But now that amount, whatever they are claiming, need not be seen. But award is same. Award amount maximum 20 lakhs. Even if they are claiming for 30 lakhs, award can be maximum 20 lakhs only, maximum. So 20 lakhs is the award, plus additional 1 lakh for this his mental harassment, loss of time, like that, plus whatever the actual loss incurred, all the three. 20 lakhs maximum award, 1 lakh additional can be given, plus actual loss whatever he has had, that also can be included. Now there is a deputy ombudsman also. Deputy ombudsman will see whether all these are okay, this complaint, whatever thing, everything that will be there. Another change is, see, within 15 days of receipt of that, the ombudsman, they will send the letter to the designated officer, who should be minimum general manager. They have to give a reply within 15 days. They have to give a reply. If they are not giving any reply and the banking ombudsman gives the award, in that case, bank cannot file an appeal. One of the partner that DRT and DRT limitation period. DRT, DRT, once it is DRT and DRT, it is the court normally. Only in the Lok Adalat, the limitation period will not be extended. Lok Adalat, the limitation period will not be extended. The other thing, it is just like court. Once you are filing to the court, there is no further point in limitation period. What is limitation period? The time allowed to file a case in the court. That is the limitation period. Otherwise, there is no limitation period. Normally, for filing the limitation period, the normal 3 years time is there. For the documentation, it should be valid within 3 years. Even SURFACE Act, if the bank wants to take, the limitation period should be there. During the limitation period only, the bank can take action. Otherwise, cannot take action. But if there is a property in the hand of the bank, then 12 years time is there for sale of the property, because sale of the mortgage property, there is 12 years period is there. Caveat emptor, that is a presumption that customer be aware. All these are there. They will say that this, that, so many things, but the customer should be beware. He should see whether this is okay, that is okay, this is okay. He should be beware. He should be seeing all those, then only take a decision. That is caveat emptor. One of the part.
Indemnity.
Hello.
Implied indemnity.
Implied indemnity is actually it can be expressed or implied. Implied is not express. Express means a written, properly written document. That is implied means where it is implied by the circumstances, say that it is like that. Fixed and floating charges. Suppose I am purchasing a car or I am purchasing a house. The charge on that, it is fixed because it is the house or it is a car. The car chassis number, it is mentioned there. The registration number, it is mentioned there. It will not change. It will be the same. If today, 2 years back, afterwards, it is the same house. After 10 years, it is the same house, same number, same thing, everything. But in the case of floating charges, suppose the bank is giving a loan to a trader. So he is having stock. He is purchasing the stock. He is selling, purchasing again selling, again purchasing, selling. The stock will not be the same every time. It is going on changing. In case of a manufacturing unit, the whatever security given to the bank, that will go on changing as a hypothecation. floating charges normally in case of hypothecation. So it is going on changing. That is called the floating charges. Fixed charge means the security will not change. Floating charge means security will go on changing. Staff, okay, I'll just see. Just 1 minute. There are so many questions coming. I'll just see one of them. Just in between, I'll just take a not a break, just for some main points, some here and there will say, because this module also, there will be minimum 15 marks question will be there. So mainly it is the sections. So you may be worried, confused about the sections and other thing. Just for that, I'm just repeating. I will just go through that. So section 5B is, everybody knows, that is what is the banking definition. Then section 6 says that what are the permitted business a bank can take. That is section 6. Section 7 says that bank has to use the word bank, banker, banking, or any company which has not received the license, they should not use the word bank, banking. Then section 9 says that a bank can keep immobile property with them for a maximum period of 7 years for other than own use. If they are using it for own use as their branch or some other office, then up to whatever period they want to do, they can take it. But just like that, they cannot keep it for more than 7 years. Then special cases, RBI can permit another 5 years. So normal case, 7 years plus 5 years, there can be there. Then section 10, it is the composition of the board. 51% of the people should be having knowledge. There should be at least 2 persons having a specific knowledge. Then section 10(2)(a) says that a director can hold office continuously for a period of 8 years, not more than that, 8 years. And section 10(2)(a)(11) says that this chairman or director, once the RBI removes them, just like this case of our Rana Kapoor S Bank, they cannot come back before a period of 4 years. Minimum 4 years should be there. Then 2(b) says that about the substantial interest. What is the substantial interest? It is 10% of the share or 5%, 5 lakh amount, whichever is there. And the 10(b) says that a chairman is posted for a period of 5 years. But after 5 years, he can again be, the period can be extended. It means 5 like that, it can be extended. If RBI is posting a director temporarily in place temporarily, so he can temporarily, RBI is posting, so he will be there for a period of 3 years, which can be extended by another 3 years. This is about section 10. Section 11 says about the paid up capital of any bank. Normally for a foreign bank, it is 15 lakhs minimum paid up capital as per section 11. And if it is having office in either Mumbai or Calcutta, 20 lakhs. For an Indian bank, which is having branches other than Mumbai, Calcutta, it is 5 lakhs. If they are having branches in Calcutta or Mumbai, it is 10 lakhs. This is main. There are so many other things also. Then section 12 says that authorized capital, whatever that bank is having, whatever mentioned in the memorandum of association, if it is mentioned the authorized capital is 100, say 1,000 crores, then they should have a subscribed capital minimum 50% of that. That is 500 crores. And again, they should have 50% of that subscribed capital as a paid up capital. Minimum 250 crores, it should be there. And the section 12(b) says that RBI's permission is required wherever the shares or voting right is 5% or more is transferred. That RBI prior permission is required. FDI, foreign direct investment, foreign the institutional investment, the NRI, all together in the banking sector, there can be 74% in any private sector banks. Section 13 says commission on shares, it should be maximum 2.5%. If the bank wants want to issue shares and they want to give commission to the brokers and others, it should be maximum 2.5% of the actual sale value of the share, not on the face value, whatever price the sales is happening. Suppose the face value is 10 rupees and the actual sales is 100 rupees, 100 rupees ka 2.5 can be there. Section 15 says that there are certain restrictions on dividend. How much dividend payout can be there? Maximum 50% is the dividend payout. Whatever the profit is earned, out of that 15% only can be given as dividend. There are so many other conditions also. So for making the dividend payment, there should be CRIR of minimum 9% and net NPA should be within 7%. If the CRIR should be there for last 3 years, this year plus the previous 2 years, if any year, last year plus 2 years, if it is not there less than 9%, then the net NPA should be minimum 5%. Section 19 says on the formation, section 19.1, it is on the formation of the subsidiaries. Section 19.2 is very important. That is 30%, how much a bank can give a loan against shares. 30% of the paid up capital and reserves of the bank, or 30% of the shares of the company, capital of the company, whichever is lower. So for the bank, it is paid up capital plus reserves. For the company, it is 30% of the paid up capital, whichever is lower only, they can give loan.
Sir, ഇതിന്റെ ഇതുണ്ടോ?
ഏതാ?
ഇത്രയും ലോസ് എല്ലാം ഉള്ള PowerPoint presentation.
I will just first main points only I'm just saying. Section 21 is on the selective credit control. Selective credit control is RBI can give directions, how much amount can be given, what should be the minimum margin, what should be the interest and other thing. As of now, only one item is there under selective credit control. That is the sugar, the surplus buffer stock of sugar with the sugar mill. Section 21 says that no loan should be given against its own share. No bank can give loan against its own share. Section 20A says that this bank, any loan given to a director, it should not be written off unless and until they take the prior permission of RBI. Section 21A says that whatever the bank is giving loan, that cannot be questioned in the court or based on the interest charge is very high. That is the Usurious Loans Act that is not applicable for the bank loan. Section 26 that is on the unclaimed deposit and DUF. After 10 years, the amount is transferred to RBI. Section 17 in between, that reserve fund 20%. So should not be confused. One is as per the act. Section 17 says if the question is on the act, that is statutory as per the statute, as per the act. As per act, it is 20%. But as per RBI regulator, our RBI, it is 25% since March 2001. Please remember, if they are asking as per section 17, you have to write 20%. If they are asking as per RBI, it is 25%. As per section 25, any bank in India, whether it is foreign banks or Indian bank, they should have whatever liability they are having, deposits and other things they are taken, 75% of that should be kept as an asset in India. Section 29 says that the financial statement, all the banks in India, they have to prepare financial statement as on 31st March of every year. And the format of the financial statement, it is available on as per the Schedule 3 of Banking Regulation Act. Section 30 says that all the bank accounts that should be subjected to audit by qualified persons, chartered accountant, and the bank has to submit the financial statement within 3 months of the closure of the year. That is within 30th June. But RBI can extend it by another 3 months, that is maximum up to September 30th. And it has to be published, whatever result, it has to be published in newspaper within 6 months. That is by 30th September, it has to be published. Section 45 says this central government can bring rules for preservation of the records. PMLA says that 5 years, if the account is opened, the KYC document has to be kept 5 years after closure of the account, not from the opening of the account. Section 45 says the paid check can be returned back to the drawer, but there are certain procedures to be followed. There should be a request. The duplicate copy of that has to be kept in along with the voucher, and this receipt also has to be kept along with that voucher. Any specific questions you want on? Okay, when I will go
unpaid seller.
Unpaid seller. Unpaid seller is, suppose I have purchased a item from you. Okay, you are a trader. I have purchased an item from you. Say mobile I have purchased. Okay, so say this mobile cost 30,000 rupees. I have purchased from you. I gave you a check. Okay, you presented that. You give me the item. I have taken that item. I have given you a check. You presented the check, but it was returned. Now you are an unpaid seller. You didn't get the money. So that person is the unpaid seller. Is it clear? Usufructuary mortgage. Usufructuary mortgage is that you can get the benefit out of that. You can use that, but you are not an owner. So another person is transferring it to you. So you are a mortgagee. The owner is transferring you the possession, only the possession. You can take the benefit, whatever coming from that. If it is a mango grove, you can pluck mangoes. If it's a coconut grove, you can take the coconut. If it is a given, it is a given on a rent, you can collect the rent from there. But ownership is not transferred to you. Only possession is transferred to you. That is usufructuary mortgage. Anomalous mortgage is there are 5 types of mortgage already mentioned. One is a simple mortgage, another English mortgage, conditional sale, usufructuary mortgage, equitable mortgage. So these are the 5 one. So last one is not, if not belonging to any of these 5, that is a anomalous mortgage. Either it may be a combination of 2, or it is not mentioned anywhere in that. That is the anomalous mortgage, not mentioned in anywhere among these 5, or normally it will be a combination of any of that. That is anomalous mortgage. Appeal to higher authority, which is final settlement, sir. DRT. Achha, this DRT is a final authority. Okay, DRT ke appeal will be going to the DRT. Please remember, it is only 30 days. Somewhere it may be shown as 45 days. That is all changed. Now it is 40 days, 30 days only. Normally, any appeal, it is 30 days, except a few, like that in the case of Consumer Protection Act, from the district court to state court, it is 45 days. Otherwise, normally it is 30 days. Here, once the DRT is taking a decision, against that, the person cannot go to the court. The appeal is not there. Appeal against is not there. But there are 2 exemptions. He can file a writ petition, not appeal. He can file a writ petition, and he can file a case in the Supreme Court also, special leave petition. Suppose that if the things, proper rules are not followed, he can file that. But appeal cannot be given. No appeal against the order of the DRT anywhere. Okay, but a writ petition can be filed, and special leave petition can be filed in the Supreme Court.
Sir, surface in the DRT 45 days.
That is not an appeal. That is not an appeal. Who is filing that? The borrower is filing to the DRT. It is not an appeal. What is the appeal? Suppose from the DRT, it is going to DRT. That is an appeal. Here there is no appeal. He is giving a complaint. He is given application, not an appeal. It is an application submitted by the borrower or guarantor after the bank has taken possession of the property. Within 45 days of taking the possession of the property, he has to file to the DRT. But if you want to go to the DRT on appeal, 30 days time is only there. Again, he has to pay 50% of whatever the order it is mentioned by the DRT. That amount has to be paid. And in special cases, the DRT can reduce that into 25%. In forgery, one more big thing, because so many people are confused. Forgery, bank will not get any protection at all. In the case of forgery, no protection. Today also one person was arguing with me, sir, it is a mistake of the the account holder. He has not kept that check properly. That is why somebody has misused that. Whatever may be the case, please remember, my dear friends, if the mention is there on forgery, the signature is done by somebody else, bank will not get any protection. Bank is level to the true owner account holder. And one more thing, if there are two persons signing, one signature is correct, but the other signature is forged. In that case also, bank will not get any protection. If the changes are not apparent, bank may get a protection. But if the signature not apparent, bank passed, but it is a fraudulent signature, no protection for the bank. That is only the exception where bank will not get any protection, because any debit to the account, it should be with the mandate of the account holder. If it is done by somebody else, no protection to the bank. Any question coming on forgery of customer's signature, please remember, bank is liable. In the other case, if the amount is changed but it is not apparent, if the name is changed, it is not apparent, then bank will get a protection. But the signature is changed, which is not apparent, it looks just like that, but it is proved in the forensic department, this person, this is not his signature, then bank is liable to make the payment.
Sir, endorse ചെയ്ത ചെക്കിനായാലും അങ്ങനെ കിട്ടത്തില്ലേ?
Endorse, but which type of check? See, first I am saying about the signature part. I am saying about the signature of the account holder. If the signature of the account holder is forged, there is no protection for the bank. Now you are saying about the endorser signature. How the bank knows his signature? Account holder bank knows. So the one check is issued, Mr. Raghavendra. So, okay, some Raghavendra is signing. So whether the bank is having the record of his signature, it is not there. Only thing, he has to see whether it is a regular endorsement or a irregular endorsement. If it is a regular endorsement, even if it is forged, don't worry, bank will get the protection. But signature of the customer forged, that is account holder forged, no protection for the bank. Perpetual succession means a company, it will go on forever. That is perpetual, continuously. It will go on forever. All the directors of the company may go. For example, in the case of Yes Bank, all the management, their management has gone. But the company has continued because it is a legal entity, separate entity like that. That is a perpetual succession. It will go on till it is finally liquidated. Assignment where it is done. Assignment is an actionable claim. What is an actionable claim? Where you can take an action against that. You can go to the court if it is not paid. In the case of actionable claim, that this assignment is transferring of whatever right he has to get from a third party. There are three parties in that assignment case. One is the person to whom he has to make the payment. The other person who is taking a loan from another person, by transferring, giving the right to collect the amount from that. For example, we will take the case of an LIC policy. Who has to give the money as per the LIC policy? It is the LIC only he has to give. Now the borrower is taking the loan from the bank. He gives the right. The borrower has to, is a LIC holder, policy holder. He has to get the money from the LIC. So that right which he has to get from LIC, that he is transferring to the bank. That is the assignment. Now the bank can take the money from the LIC directly on the strength of the letter given by the LIC policy holder. That is the assignment. Assignment means the money to be received from a third party, that is the right to collect that is transferred to another party. That is the assignment. Hypothecation is suppose lien, it is giving the charge to him. The property has to be given to that person. He is holding that. That is the lien. For example, if I am giving my car for servicing to the service center, he can take hold that till I am giving the money to him. That is the lien. But the bank is having general lien also, not only for that security, other securities. So hypothecation is where the possession has not been handed over. Pledge, in the case of pledge, there is possession is handed over. If the borrower wants to take a gold loan, the gold is given to the bank. Bank is having the possession. But in the case of hypothecation, that neither the ownership nor the possession, it is given to the bank. Ownership is also with the borrower. The possession is also with the borrower. But only a charge has been created. There, suppose he is not making the payment on the due date as per the mandate given as per the agreement, the bank can take that hypothecation. And the first time where the hypothecation is mentioned is under the Surface Act. Nowhere else hypothecation is mentioned. For the first time, it is mentioned under Surface. Possession is handing over the to him. For suppose just think of that a gold loan. Gold loan, what the borrower will do? He will hand over that gold to the bank. So who is holding that? The bank is holding. That is the possession. Holding that, keeping it with him. That is the possession. In the case of gold loan, bank is keeping. But in the case of hypothecation, bank is not holding that security with the bank. It is with the borrower only. Liability of the firm, if it is a case of the firm can be two types. That's a limited liability partnership and the liability partnership, normal partnership. Limited liability partnership, only whatever money he has given, that only he is responsible, not for the entire liability of the firm. But a normal partnership, each and every partner is liable for the entire liability of the firm. Entire liability of the firm is individually and severally as a group. Or suppose there are 4 partners and the total dues liability of the firm is 50 lakhs. Each partner is liable for all the 50 lakhs, entire 50 lakhs. And as a group, 4 partners together, also they have to pay 50 lakhs. So each and severely and individually, they are responsible. One of the partner wants to exit from the partnership. It all depends. Okay, definitely he can. If it's at a will, he can request that I want to exit from that. And you have to see the partnership deed. If that partnership deed says that if one partner shows the partnership also will be winded up, then it has to be winded up. Otherwise, if the partnership shows that if one person is going, the partnership will continue, then they can continue. Minor's liability in the partnership is only that amount which he has kept for the as a partner. Suppose a minor has kept say 10,000 rupees as his capital. So he is liable only that, because no action can be taken against a minor. Only against his asset, only against his estate action can be taken. Here no action against him. 10,000 he has kept. Only that can be touched, nothing else. But after he becomes a major, normally a minor can be taken to the taken to the partnership only for the benefit, because the liability cannot be there for him. So normally, just we were saying that if there are 50 lakhs, each partner has to pay that. But a minor need not to pay that. He is not liable. Only he has to get the benefit, whatever the profit, he can take a part of that. But other liabilities, he is not responsible. But once he is completing 18 years, within 6 months, he has to give a public notice that either he want to continue as a partner in this partnership, or he don't want to continue as a partner. Either this or that he has to give. And if he has not given the public notice, it is treated as he wants to continue. If you don't want to continue, you should definitely give the public notice. Once he is giving the public notice, no further liability for it. Till he is taken out of that partnership, his liability will continue as that of a minor, because he is not liable, only enjoying benefit. But once he is giving the notice, so he is liable just like any other partners. Minimum share capital, please note that there is no minimum share capital now for the public company or the private company. Earlier it was not there. Now it is from 2015. Somewhere you may be reading that for a private company it is 1 lakh, for a public company 5 lakhs. Nothing like that. 2015 Companies Act changed. It has changed. Now there is no minimum mentioned. So 2 persons with 1 rupee contributing, they can start a company, because the startup companies, they have ideas, but they don't have money with them. So they want to start a company. So earlier what was happening, if they want to start a private company, 1 lakh they have to keep always as capital. They cannot withdraw that. Now that is not required. No minimum, 1 rupee each also. 2 members should be there. For a private company, there should be minimum 2 members. In a private company, 2 members minimum, maximum 200. Please note that one also. Private company minimum 2, maximum 200. Public company 7, no maximum. Partnership minimum 2, maximum 50, not 100, 50 only as per 2014 central government rules, miscellaneous rules, to 50 only, not 500. Then number of directors, there should be 2 minimum directors in a private company, minimum 3 directors in a public company, minimum 1 director in a 1-person company, minimum 5 directors in a farmers produce company, and maximum directors in any company is normally 15, not more than that, 15. But in the case of a public company, if in the general body meeting of the shareholders, they can increase that number of directors. And again, how many directorship a particular person can hold? Any person, he can be director of maximum 20 companies, not more than that, maximum 20 companies. And out of that also, in public companies, he can be maximum for 10 companies, not more than that. Total, including 20, including this public company, in public company maximum 10, total can be 20. 1 minute, if the theft happened. Prospectus is that mentioning that suppose a public company, listed company, they are going for IPO, initial public offer, or follow-on public offer, or whatever it is, they are taking loan or other thing. In that case, they have to mention everything. So if they are going for initial public offer, how much is the total amount? How much is the per share amount? For what purpose this fund will be used? Then write up about the company, the directors, everything has to be mentioned. So that is the prospectus, giving information about the company, shares, and other thing. Different type of normally all this information are given, but in the case of red herring prospectus, what is red herring? So they are taking you from the main plot to something else. That is red herring. So main thing about the prospect is what is the total amount of share they are going to collect, and what is the value of the each share. Well, red herring prospects, that will not be mentioned. That's why it is called a red herring prospects. So that is initially giving an information we are going to issue. This public also will be aware of that. Yes, it is going to come. So that is for that the red herring prospect is given. And there is another thing, shell prospect. That suppose in the same year they are issuing same type this shares and other thing. So first time they are done, say second time same again prospect is not required. They can take it out from the shelf and issue the same thing. That is the shelf. Difference between co-obligant and guarantor. Suppose I am giving a loan to a housing loan. So I am giving whatever is Deepa has asked that. Okay, Deepa and Deepa's husband. I hope Deepa is married. Deepa and Deepa's husband are the owner of that property. So both are co-obligant. Both are borrowers. That is a co-obligant. Both having the same liability as the borrower. Guarantor is a third person who is not the borrower. He is guaranteeing that if the borrower is not making payment on the due date as per the agreement, then I will make the payment. That is the guarantor. Co-obligant is one of the another borrower only. I will just go through some of this thing also, just in between. Something is missed. Let me see. Difference between obligate and this thing. Then bill of lading is just lorry receipt. What is the lorry receipt? That is a document to the title of the property. If the goods are sent through lorry, they will issue the lorry receipt. If they are sending through railway, that is also document to the title of the property. If it is sent through railway, there is a railway receipt. If the goods are sent through a ship, then there will be bill of lading. That is a document to the title of the property. And it is all these are negotiable instrument also. But airway bill is not a document to the title of the property normally. And it is not a negotiable instrument because it is only a receipt that we have received these goods. It is not that it cannot be endorsed. It cannot be transferred. It is only a receipt, just like this courier receipt and other thing. So airway bill is not a negotiable instrument. It is not a document to the title of the property. If it is a document to the title of the property, it can be endorsed. It can be transferred. It is a quasi-negotiable instrument. But airway bill is not a negotiable instrument. Bill of lading, I already mentioned. Difference between obligant and guarantor, I have already done. Prospects also I have mentioned. If the theft happened in the bank, will bank liable for articles kept in locker? So you have to go through the bank. Very good, valid questions. You have to go as per the latest RBI guidelines, which has been issued last year. As per that, RBI clearly says that if there is a deficiency on the bank of the on the part of the bank is liable. Suppose we know to construct a proper this should be there, strong root should be there, everything should be there, but there is a limit up to which the liability will be there. Please, you can please note that it is up to 100 times of whatever the annual rent payable on that locker. Suppose on that locker, the annual rent is 2,000 rupees. Bank is maximum liable for 2 lakh, 100 times of that. The theft normally, they will definitely claim from the bank only. Who else they will claim? So it is your mistake. I have kept there. It is your mistake. You are not properly done. You see, your proper arrangements are not there. But there is a limit up to which it can be done. It is 100%, 100 times only. And again, the bank is saying all the customers on your behalf, on your interest, please insure your property, whatever kept in the locker. The customers are advised to insure their property, whatever documents or gold or whatever they kept in the bank. And the liability of the bank is restricted to maximum 100 times of whatever rent payable from that.
Sir, if the question is asked, I asked the question, sir. It was me who posted it. Sir, But I read this question in four or five occasions, sir. Everything it is written as not liable. The bank is not liable.
Why? How it is not liable? Somebody has entered the bank and because you have not kept the strong room as properly, na? So bank should be liable. Where the customer will go? It is your mistake. They are kept in a proper place. So you have to give that money to that person. So many cases has happened where the bank is forced to give to them.
Okay, sir. Liable. The answer should be liable, isn't
Yes,
it?
yes. Dividend, we have already told the maximum payout is 50%. Maximum payout, the dividend payout for the bank is maximum 50%, not more than that. But before that, 25% has to be transferred to your reserves. Minimum share capital of RBI. RBI is fully owned by central government only, nobody else.
Sir, Usan's bill.
Usan's bill is some credit bill. There can be two types of bill, DP bill and DA bill. DP bill is delivery against payments. The documents to the title of the property will be handed over to you only after making the payment. That is the DP bill. That is, we call it site bill also. Site bill is when you make the payment, take the documents to the title of the property. That is the DP bill. Another one is a DA bill, delivery against acceptance. Here, any bill, it has to be accepted by the drawee. So who will issue the bill? It is the drawer. So the drawee has to accept, then only he is liable to make the payment. So this bill you accept, we will hand over the documents to you. There the payment may be after 1 month, after 2 months, after 3 months, whatever it is. That is almost like a credit period. That is a Usan's period. That is payable after a certain period. So that period, say if it is 3 months, that period, he is getting free credit. The goods already he received. The documents to title of property already handed over to him. So he is enjoying that benefit and he is getting free credit period. That period is called the Usan's period. He has to make the payment on the due date, whatever mentioned in that bill. If he is accepting that, if he is making that, okay. Otherwise, he is liable to make the payment. RBI can also make a application to the High Court for winding up, and if the bank directly can also make a request to the High Court. But normally in that case, RBI, this High Court will take an opinion of the RBI. Normally it is done like that. If the company itself gives that request to the High Court for winding up, they can also give, but definitely they will take the recommendation opinion from the RBI.
Inland bill, foreign bill.
Inland bill, foreign bill. Inland bills is whatever payable in India. Foreign bills is whatever payable international transaction. So inland bill is, inland means India or domestic. Domestic bill, say drawn from Chennai and payable in Mumbai. That is a inland bill, domestic bill. But one bill drawn in Mumbai but payable in America, that is a foreign bill. Or drawn in say UK and payable in Ahmedabad, it is a foreign bill. Which is the most important. Actually, it is a reverse order. Most important is D, then C, then B, then A. So you can expect, so I'm just saying an average, I am only saying average, it may not be the same. You can expect 35% questions from D, 30% questions from C, 20% question from B, 15% question from A. Okay. So it can be here and there, but the most important is D, C, B, and A. So you can expect around 15% questions from A. Minus liability.
Chairman 10 years, sir. 8 years or 5 years, sir.
Which one?
Chairman, sir.
Chairman normally 5 years. But he can be extended 5, 10, 15, 20 like that. He can go. But the director continuously maximum 8 years. After 8 years, there should be a break. Okay. So
And there will
we
be
have seen HDFC Bank, our Parekh sir, how many years? When it was started, he was there. Recently only sir has left. So 5 years at a time, then it can be extended. In case of a death of a partner, all the partners, including the property of the deceased, is liable. In the case of death, any liability is there, the property of the deceased partner is also liable. Definitely, if he has got a share capital there, that is also partnership capital, that also liable. If he is having any property also, that is payable. But if it is a running account, suppose if it is a loan account, normally what a bank will do, they will stop operation in that account. Otherwise, the Clayton's rule will come. What is the Clayton's rule? The first this debit in the loan account, it is a debit. The first debit will be taken off against the first credit. Whatever credit comes, it is the first debit will be wiped off. If yes, suppose there is a say 50 lakhs a loan outstanding, the partner expired, is actually his estate is also liable. The bank allowed to continue the operation of the account. Say it is a OD account or cash credit account. It is an operating account. So there is a subsequently credit coming. So 10 lakhs is there. That means the original liability 50 lakhs, which was there at the time of the death of one of the partner, that has been reduced by this 10 lakhs. There may be further debit. Further debit will not be taken into account. Only credit will be taken account. Suppose during the next 3 months, there is more than 50 lakhs transaction in that account, the deceased person is no more liable because entire amount of whatever outstanding at that time, that has been already wiped off. Maybe there is credit, debit also, credit also. Debit will not be taken against this original debit. Only credit will be taken. That is why banks, when one of the partner dies, if there is an OD account or CC account, bank will immediately stop operation in that account, so that the liability is fixed against that person who has expired, against his otherwise Clayton's rule will come. Hello? 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 Hello, can you hear me? Hello? 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 Hello?
Yeah, friends, please wait.
Sorry, dear friends. Somehow it got disconnected. Sorry. Whatever earlier doubts you were having, I think it has gone. Hello, are you able to hear me? Hello.
Yes.
Okay.
Yes, sir. Yes, sir.
Okay.
Yes, sir.
Okay.
The
Yes,
module
sir.
C, important
Sir, can
topics
you
will
explain on
discuss.
module C immediately, shortly? Or
Mo-
important
Module
point.
C, actually, module C,
Important point, sir. I know it's DRT surface, just like in brief,
Okay.
5
Okay.
minutes.
DRT just main points which I want to say is that their tenure is 4 years. You must be reading somewhere 5 years and like that. You remove all those things. It is 4 years. Now it is done as per the Finance Act only, not as per the DRT Act. Earlier it was as per the DRT Act. Now all the tribunals, it is coming under the Finance Act. From 2020 onwards, it is 4 years for both the DRT and DRAT. And the age is 65 for DRT, that is the presiding officer, and 70 years for the chairperson. Those you should remember. And then that to 50% on the time period given for DRT is 180 days or 2 sittings. Within that, they are supposed to complete that. And DRAT, the time given is 6 months. So within 6 months, they have to complete that. There is no appeal against DRAT's final decision. Only writ is possible, appeal is not possible. Then in between, so where to suppose one bank has already filed. Suppose the bank is in Bangalore and the borrower is also in Bangalore. He has filed a case against this person, this borrower. It is running in the Bangalore DRT. In between, suppose this person has taken a loan in Chennai also, that loan is also bad. That Chennai bank can join this bank in Bangalore bank. So till that final order is given. Normally it has to be given to the same place only. But here, since it is already going in another DRT, the other bank, which is not there in that place, they can also join here. No issue, but till it is done. And one more thing, where to normal case, where to file a case in the case of immobile property. In that case, where to file is where the court is there. You have to file a case in the lowest, that is the normal municipal court, civil court, municipal court will be there. That place, whichever is the lowest court, there has to be filed and the area where it is coming. Equitable mortgage can be created anywhere in India. There is no issue because if only thing, it should be a notified area. They may be asking a question, the company is in Mumbai, property is in Chennai, and something, a bank is in Delhi, where to create a mortgage. Don't confuse. Anywhere in India, equitable mortgage can be done. Only thing, it should be a notified area. Then Surface Act, then first part is going for this securitization and asset reconstruction. Securitization company, minimum 2 crores is the as per the act, but presently it is 100 crores. They should have the capital and they should have 15% CRR. Whatever they are purchasing from the bank, 15% at least capital should be there with them. If they are purchasing say 1,000 crores this security from the bank, they should have 150 lakhs. And when they are purchasing, it is not the full amount which they will give. Only maybe 30%, 40%, 50%, whatever it is, after due diligence only they will be doing. The originator, because originally it belongs to whatever they purchased, originator originally belongs to the bank. Bank is the originator. Obliger, definitely it is the borrower who has to make the payment. And this securitization companies, from there they will raise the money. They will be selling security receipts against whatever this loan, bad loan purchased from the bank, against that security, and security receipt is a derivative. It is given as a undivided share. So depending upon the amount, how much they are investing that, it is undivided share. They cannot say this security is against this particular loan. That cannot be there because they are purchasing a pool of account, maybe 100 auto loans or some other education loan, 1,000 education loans, like that they are purchasing. It is on the undivided. Earlier it was to be sold only to the qualified institutional buyers. Now it is the qualified buyers. Qualified institutional buyers, they have to register with the SEBI. SEBI is the controller in that case. But this securitization company, they have to take a license from RBI. RBI is the regulator for SARFAESI Act, this securitization and asset reconstruction company. Asset reconstruction company, what they will do? Securitization is converting that this bad loan taken over from the bank into securities and issuing security receipt against that and taking money. And with that money, they will make a payment to the bank. So all this entire thing has to be completed normally within the 5 years. And they can give part amount to the bank and part amount debentures also. If it is debenture is issued, minimum 1.5% above bank rate should be the interest to be given. In the case of SARFAESI Act, Section 13(2) says that 60 days notice has to be issued. The notice can be issued by the authorized officer only. Authorized officer is a person who is holding the scale 4 or equivalent post in the public sector bank. He can issue the notice. As per Section 13(3)(a), if the customer is objecting to the notice given, 60 days notice given, or he is making some representation, the reply has to be given within 15 days. If the party is not making payment within 60 days, he has to make the full payment. Part amount, he cannot claim his right, I have made the part amount. If the bank don't want to continue, it is fine. Otherwise, if part amount also paid, bank can take possession. After 60 days, if the amount is not paid, the bank can take over the possession of the property as per Section 13(4). And the bank, if they think that there will be some law order problem, some gundagari, some people will do it, then they can take the support of the district magistrate or the chief metropolitan magistrate. If it is a metropolitan area, as per Section 14, the CMM or the district magistrate, they have to give the support to the bank. The bank has to request through the authorized officer giving affidavit and letter and that thing. If they think that it is okay, they have to issue the order within 30 days, which can be extended by another 30 days. In that case, they will take the possession and hand over the documents to the bank. Then bank can sell the property within 30 days. They have to give the notice. Within 30 days, if the amount is not paid, we are going to sell that property. Then before that, they have to give that in the newspaper also. They have to give the publication in 2 newspapers. One should be in regional language, vernacular language. And if they are not making the payment within 30 days, the bank can sell. Bank authorities also can purchase. They can also bid. But the minimum amount should be 75% of the reserve price. The minimum, that is the price. If anything to be sold below that, the consent of the borrower is also required. And once the highest bidder it is given, within the same day or the next working day, he has to make a payment of the 25%. The remaining amount normally has to be paid within 15 days, which can be extended by the bank up to 3 years. And this entire, any amount, the remaining amount is there, that has to be paid to the borrower. Any surplus is there, it has to be paid to the borrower. Sarsai, there was earlier this penalty and other thing. Now that is not there. Period was there. It has to be reported within 30 days. That time is not there since January 2020. That time is not there. But whoever is doing the registration first, they will get the claim on that. Priority will be there. Now, not only the secured creditor. Secured creditor is a creditor, banker, or a lender to whom security has been given as a charge against the security, against the loan taken. Other than the secured creditor, also can enter their charge in the Sarsai. Anybody can charge. The government officials can also do. Suppose income tax, they can also enter their charge over the person or the security in that Sarsai, even though they are not holding any security. That is, but Surfacing Act can be taken only by the secured creditor. Others cannot take Surfacing Act just because they entered in the Sarsai. That is not there. Then there are so many exclusions for taking this Securitization Act provisions. In the case of agriculture land, it is not possible. Up to 1 lakh loan, it is not possible. It has to be more than 1 lakh loan. Outstanding should be minimum 20% of the total dues payable, including principal and interest. If it is less than 20%, suppose 1 crore is the total outstanding plus interest plus principal, he has already paid say 90,000, 10 lakhs is only remaining. Surfacing Act cannot be taken. It should be, in the case of 1 lakh, it should be at least 20 lakhs, 21 lakhs, like then only it can be done. Minimum 20% should be there. In the case of aircraft and other thing, it cannot be done. Agriculture, I already told. So limitation period gone, then again, this cannot be done. That is about the Surfacing Act. DRT Act, we all. Then here that once the possession is taken, then the borrower can appeal to the given application to the DRT. Only DRT can entertain such cases. Nobody else. Only DRT can entertain such cases. They can give an application to the DRT within 45 days of taking possession. Any appeal to the DRT should be within 30 days. That is the time given.
Sir, this reserve price differs if a bank is taken and public is taken, sir?
No, reserve price, who will decide? It is based on the valuation report. It is based on the valuation report. Normally, reserve price will be 75% of the valuation, whatever the valuer is giving. Valuer is an approved valuer. Whatever valuer is giving the value, 75% of that will be normally kept as the reserve price. That is the starting price. Bid starts from that price only. That is normally the...
I think it is 25%, sir.
Reserve price is normally 75%, sir.
Sir,
How it can be 25%? Sir, 1 crore property, you want to sell it at 25 lakhs. Is it possible? It is normally 75%, sir. So 25% you can reduce. Okay. In Module D, definitely Company Act, it is most important. Then partnership. What percentage to be deposited while approaching DRT and DRT? While approaching DRT, nothing to be approached. Only thing, if the bank is going, minimum 20 lakhs should be the amount to be recovered by way of principal, interest, charges, everything. Minimum 20 lakhs should be there. Nothing to be deposited there. Then going appeal against the order of the DRT to the DRT, then 50% of whatever in the order given by whatever amount shown in the order of DRT, that has to be deposited, which special cases the DRT can reduce into 25%. But if the bank is giving an appeal, bank need not make any payment because bank has to receive only. This is done to avoid the normal court practice where any case it will go to appeal and like that. That should not be there. That to curb that is done. It is 50%, which can be reduced to 25%. RTI Act, Right to Information Act, in all public sector undertakings, all these public sector banks and other things, there should be an officer. So here they have to give any information the customer can take, any information they can take, other than which is concerning our country's actually safety and other thing, which is excluded. Other than that, any information, if I am taking an information, I need not say why I am taking the information, not required. 10 rupees stamp paper, I can, that postal order I can give a paper application, just writing. In all public sector undertakings, there should be a person in the controlling office who is called the CPIO. Then there should be an appellant authority in the same department, which is there maybe in the head office level. Normally, any information asked, that has to be submitted within 30 days. And if it is affecting the life and other thing of the person, then in that case, within 48 hours, the information has to be given. If the information is not given within 30 days, then it can be appeal can be done. There are two types of appeal. First appeal to the senior officer in that public sector undertaking. If it is State Bank of India, the whoever is the person designated as the appellant authority to whom the application has to be given. Then if it is says State Bank of India is a public sector undertaking, then the final second appeal has to be given to the commissioner, Central Information Commissioner. It can be given. There it is normally 90 days for that appeal against the order. 90 days is available. DRT, DRAT fees, actually it is 12,000 rupees. For earlier it was 10 lakh minimum. So 12,000 rupees for 10 lakh, and additionally every 1 lakh it is 2,000 rupees maximum. 1,50,000. 1,50,000 is the maximum. So 1 lakh each 1,000 rupees every 1 lakh. Now if it is 20 lakhs, 22,000 is the minimum amount to be remitted. Maximum amount is 1,50,000. Earlier 10 lakhs was there. At that time it was shown as 12 lakhs. 12,000 rupees. Now since it is 20 lakhs is the minimum amount, 22,000 should be the minimum fees. Maximum it is 1.5 lakhs. Anything else? Limitation period for bank guarantee. So bank is issuing a bank guarantee. See, any these type of things, it is the 3 years from the date it is due, from the payment it is due, from that 3 years. Even for this EMI, equated monthly installment, or installment, equal installment, in that case each installment from that when it is due, from that 3 years from that. Suppose this loan is given for 5 years and the repayment starts from June 2022. First installment, the limitation starts from that day. Suppose if it is payable on say 18th June. So 18th June, 3 years from that is the limitation period. So if the next installment is payable on 18th July, for that in particular installment, the limitation period starts from 18th July to 3 years. Whenever the amount is due, that is normally in the case of guarantee. In module D, which portions are already discussed? I think it is Companies Act. Maximum questions will be asked on the companies. Then anything else? Anything else? Deposit that IRC is taken only, secured creditor, unsecured. See, there should be some asset. ARC, one question is, ARC is taking only secured assets or unsecured asset. What is secured assets and unsecured asset? Suppose some security has been given, charge created on that, then that is the secured asset. Suppose in the case of, suppose anything, even if it is a guarantee, that is some security is available. In that case only it can be taken. If it is a TOD, clean loan given, what is the security there? So the guarantor is also treated as a security, part of the security. So if it is a clean TOD, there is nothing there. So you cannot recover anything. In that case, guarantor, the ARC can follow up with the guarantor and recover. If there is no security, nothing is a clean OD, then nothing is there. They cannot go. Capital requirement for all banks like PSBs, RRBs. So now for the payment banks, it is 100 lakhs. Payment banks, it is 100 lakhs. Small finance bank, 200 lakhs. And normal banks, it is 500 lakhs. This is the present capital. Earlier it was 5 lakhs, 10 lakhs. That is as per the statute. Presently, it is like this. Payment banks, they can take a deposit maximum 2 lakhs. That too, this demand deposit only, savings and current account. They cannot take fixed deposit from the customer. The payment bank cannot issue credit card. They cannot issue loans also. They cannot give. And this small finance bank, 50% of the loan should be for small finance, that is below 25 lakhs. Reserve funds, we already discussed from the profit, 20% to be transferred from the profit as per the section 17, that is the statutory. Then as per RBI, since 2011, they are saying 25%. RBI says that 17% as per that is the minimum. So you give more than that. DRT is applicable to cooperative bank. Please, somebody was asking this question also. SURFACE Act and DRT Act, it is applicable to cooperative banks also. Please note that, keep it into mind. It is applicable to cooperative banks also, both the DRT and SURFACE Act.
Sir, regional rural banks.
Regional rural bank, definitely it is applicable. RRBs, definitely it is applicable. RRBs are formed as per the RRB Act 1976. Now there are 43 RRBs. A RRB has to be sponsored by another bank. That sponsoring bank has to give 35% as the share capital. Central government will have 50% share capital, and the respective state government will have 15%. RRBs, they can open branches only in the designated branch districts or maximum within the state. They cannot open a branch outside the state. Date of the check is before the account opened. There is no issue. There is no issue. Don't get confusion. Suppose the account is opened on 18th June. They are putting the date as 17th June. No issue. If there is balance in that account, you can make the payment of the check. No issue. Estoppel, you cannot stop. That is estoppel. So estoppel means you cannot stop. If you are representing as an agent of the firm, subsequently you cannot, even though if you are not the agent of the firm, you represent as if you are the agent. Subsequently, you cannot stop. The principle, suppose in the case of agent, who is there? Principal is there, agent is there. Principal, through his deeds, the third party seems that this person, he is an agent. This person is an agent through his action. It is shown like that. Subsequently, the agent cannot say, this principal cannot say that, no, he is not my agent. I am not responsible for that. So suppose, for example, I will just give us an example. This principal takes this person, also goes to the other persons, and order has also been taken in front of this principal by the other person. So he has made the payment, everything done. Subsequently, this principal cannot say that, no, this is not my agent. Whatever he has done, I am not responsible for that. I am not responsible. That is the estoppel. If due to his actions, the other person thought that he is the agent of that, and this principal also does not take any action to remove that, whatever he thought that to remove that is perception. Subsequently, he cannot say, I am not responsible. He has to take liability on that.
Sir, surface-ൽ നമ്മള് ഈ സെയിൽ കൺഫേം ആവുന്നതിന് മുന്നേ ബോറോവർ ക്യാഷ് അടച്ചു കഴിഞ്ഞാൽ അത് സ്റ്റോപ്പ് ചെയ്യാന്നല്ലേ?
Any time before final sale എന്ന് പറഞ്ഞാൽ നമ്മളൊരു bidding, suppose there is a bidding. So last bid, final bidding, bank has decided, okay, it is a bidding accepted. Then he cannot take back the property. Before that, even once the sale bidding started, the borrower can come to the place where the bidding is happening, and he can make the full payment and take back his property. What is the problem for the bank? Bank wants the full amount only. If he is ready to give the full amount, why the bank should not give? Any time before the final sale is happening, he can take back the property by paying the amount, the full amount. Or if the bank is agreeable, part amount also. Okay.
Okay, sir. നമ്മളെ മാഗ്മിലിന്റെ ടെക്സ്റ്റിൽ കിടക്കുന്നത് സാർ, at any time before the date fixed for sale of that.
Before the actual sale happening. Before the actual sale happening. Actual sale is okay, agreed. So on that day, suppose the auction is at 10 o'clock. Before that also, he can come and say, I want to take back this. So it started not to finalize. Bank wants to money only. Na? If the person is ready to give, why the bank is has to worry? Biju sir?
Sir, FEMA Act.
Foreign exchange, FEMA, okay, FEMA 9, it is a management act. Earlier it was FERA, Foreign Exchange Regulation Act. Now it is a management. Earlier we were not getting that much foreign exchange. So we had to regulate that. And any violation, it was a criminal offense earlier. Now as per the FEMA, it is not a criminal offense. It is civil offense only. And their main thing, who is a resident, who has stayed in India for more than 180 days during the previous year, is the resident in India. Again, how much you can, there are two types of remittance. One is capital and the other one is current account transaction. Capital account transaction, current account transaction. What is a capital account transaction? If the transaction will make any change in the assets or liability of a person in India by remitting from abroad, then that is a capital account transaction. Otherwise, from remitting from India to abroad, if the assets or liability there will be a change in the assets or liability of that person abroad, that is also a capital account transaction. Others are current account transaction. Suppose one person is going for education, there is no change in his assets or liabilities. If he is going for, if there is a property purchase, there is a change. If he is going for education, there is no change. If he is not going for tour, there is no change. If he is going for medical treatment, there is no change. So these are current account transactions. If he is purchasing some property abroad, that is a capital account transactions. So there are certain automatic amount also given. This is liberalized remittance scheme up to 2.5 lakh US dollar per year. That is freely it can be remitted. And this remittance 2.5 lakhs US dollar, it is per person. If from the family there are 4 persons, each can normally remit. But only thing, if the bank has to also confirm, if a huge amount is also going, bank has to just ask, just like that, bank should also not say, okay, that should also be seen. So it is for regulating. There are some penalty, everything mentioned there. Consideration in any contract, there should be consideration. Without a consideration, a contract will not be there. There's a, what is a consideration? You are giving something, you are taking something. I am going to a shop, I am purchasing a mobile, I am giving him cash, he is giving me money, this mobile. There is a consideration. So then it becomes a valid contract. There should be, among other things, there should be a consideration, giving or taking. Exceptions are there, but in the case of guarantee, the amount given to the borrower is consideration for the guarantor. There need not be a separate consideration. So because loan has been given by the bank to the borrower, that is a consideration for the, again, one more thing is the free will should also be there. What I was thinking. Okay, suppose there is no, I am telling my son, if you get first class in your say degree examination, I will give you a motorcycle to you. So, but he got the first class. I didn't give a money this thing to him. Okay, can he go to the court and ask the force me to pay? Because there is no consideration. It is due to my love and affection. I had told something. So in those cases, there is no consideration. Another thing, just like that, I purchased, I sold my mobile to somebody. He gave me one check. That check is returned. I can file a case against him because he has broken that agreement. But suppose for the charity institution, I have given say 1 lakh check. That check has been returned. They cannot file a case against me because it is a charity. There is no consideration. I have not taken anything. I am not. There should be a giving and taking or something. That is a consideration. Without that, the agreement will not be valid agreement. Valid agreement means it can be enforced through a court of law. That's a valid agreement. The court has to accept that. Financial Stability and Development Council, that is after that 2007-2008, there's a subprime crisis and other thing in America. So many banks, financial institutions collapsed, closed. So that luckily that does not happen in India. So then they thought, RBI, central government, they all thought, suppose in the future something like that happens in India, are we ready to face that situation? To face such situation which may happen in the future, they started this Financial Stability and Development Council. In that, mainly all this in the financial sector, there are so many regulators. RBI is regulating all the banks. SEBI is regulating the capital market. IRDA is regulating the insurance market. PFRDA is regulating the pension fund. IBBA is regulating the IBC. Then so many regulators are there in the financial market. All the financial market regulators, chairman, all these RBI chairman, SEBI chairman, IRDA chairman, along with the financial ministry, finance ministry officials, secretaries and other things, they all form a committee. That is the financial FSDC, Financial Stability and Development Council. They are all the members. And the chairman of that committee is our RBI chairman. They all sit together. The financial finance ministry officials also, they will also be there. All these financial sector regulators also be there. Anything happening. So if we are ready to face any consequences, a subcommittee is there, which means regularly their RBI chairman is that subcommittee also. Then there are certain other committees also. Then is something early warning committee, early warning, some warning is coming. Then crisis management is there. Crisis management is under the finance minister because any crisis already started, then we have to do something. So like that, the different committees are there, FSDC may.
Sir, takeover of management of companies on no prefer.
Takeover of management of companies, it comes under this SURFACE Act. If the company has defaulted, money has not been given, the management can be taken over. In that case, these directors, they will deem to be out of that office. They will not get any compensation. Even the officer staff, they will not get any officer compensation of that. They have to, as if they have vacated that seat. Is the all the directors, they are as if they deemed to be vacating their office, and they cannot claim compensation also. But workmen, they can claim compensation because workmen always there is some protection for them. There the bank can bring a new management. Some of the loss-making companies there, that can be done. This is all coming part of that reconstruction also. Reconstruction also can be done. After taking over, all these can be done by the bank, changing the management. Then because they're taken possession of the company, it is under the company's rule, the lenders control now. And any this shareholders and other thing, any they are passing any resolution, that should be with the permission of the lender only, because lender is now having the control over that. Any liquidation also starting everything, it should be after discussing with the lender only as per the SURFACE Act provisions.
So private key and public key.
Private key and public key, okay. Private key. So the private key, you can see it is transferred all the information, all the key. That signature is digital signature. Okay, you are putting a digital signature. So you are writing something, and after that only you are putting your signature. So all this you are creating through the private key. So you will have a private key. Somebody has to read that. Somebody has to read that. You should also have the key, that is a public key. So both are, so there are so many this hash and other thing, lot of things are there in that. So it should match. If somebody has manipulated, then it will not do. So this your information, digital information, whatever it is kept, it will not be available to the public. So they have to open it with the whatever information you want to share. Only those people can share that. Outsiders cannot share that. If somebody is doing any manipulation, everything will be changed. So anybody further opening it, they will be able to see that somebody has tried to intrude into that. So liquidation is closing that company. It is winding up of that company. It is a liquidation. That company, any company, it has to be incorporated. What is the incorporation? It is a birth certificate of the company. What is the liquidation? Death certificate. That company is going to die. Somebody was saying?
Transfer of Property Act.
Transfer of Property Act, TPA. Which one you want to learn under transfer? Whether you specific that say which property you want to discuss, which type of security you want to discuss.
Sir, no, sir. Just an overview.
No. See, there are so many types of creation of security. Which security you want to, whether it is mortgage you want to do discuss, or actionable claim you want to discuss. Which one you want to discuss?
Sir, mortgage.
Mortgage, there are 6 types of mortgages, which has already been discussed. There are 6 types of mortgages. One is a simple mortgage where you have to register it. The ownership and the possession can be transferred to the other person. That is normally we are purchasing the property through sale deed only. Here the charge is transferred here. Simple mortgage means charge is transferred, then this possession may be with that person only, but the anytime earlier only with the permission of the court they can do. Now with the surface and act, that is not required. It can be sold, but there is a registration. There is a registration. It is registered in the sub-registrar office. The person who is creating the charge has to go there. The person to whom it is charge is given, he will also have to go there. There is a registered deed. In the case of equitable mortgage, there is no registered deed. The borrower or the owner of the property is going to the bank and handing over the documents to the title of the property. There is no registration. Just he is handing over all the original documents, and subsequently he is sending a memorandum of deposit of title deed, a letter stating that I have kept this, I have delivered all these documents to the bank for creating security over this property. That is the equitable mortgage. There is no registration. That is the second one. In India, banks do only these two. One is the simple mortgage and the other is the equitable mortgage. Simple mortgage problem is that you have to pay the stamp duty. Stamp duty, registration charges, it comes to normally 8 to 9%. If it is 1 crore property, you have to unnecessarily pay 7 to 8 lakhs when transferring. Then once the account is closed, you have to retransfer again 7 to 8 lakhs. That is a huge amount. But in the case of cooperative banks, they are exempted from paying this stamp duty. So they are doing it. Otherwise, normally bank will not do this simple mortgage because of the huge fund involved. Second one is the equitable mortgage. These two only bank do. The third one is the conditional sale. There is no actual sale. It is ostensible sale. Only thing, he has to give back that property and retransfer that to the original person on payment of the dues. That is, the bank will not do that for creating charge over that. The fourth one is the usufructuous. Usufructuous means you can enjoy the benefit only. You will not become the owner. Only the benefit of that you can, just like giving a lease and like that. The fifth one is the English mortgage. That is for the Britishers, or the not available for the Hindus or Muslims. And it is a gentleman agreement transferring that property upon the gentleman agreement that this will be again transferred back to that. Simple that is the English mortgage. The last one is anomalous mortgage, where it is not mentioned any of that mortgage, if I'm not excluding that, or it is a combination of any of the other 5. That is the anomalous mortgage. Only in India, banks do only simple mortgage and equitable mortgage. Exception of consideration. Holder for value is somebody who has paid the money for that. Suppose your check has been lost. I received that. I am holding that check. I am a holder, but I am not a holder for value. If I have paid the amount for that, I have paid some consideration, and then only this check I got. Okay, this is 10,000 check. I got this check on the road. I got it. I am a holder, but not a holder for value. This 10,000 rupees check I am giving to the shop owner and taking this 10,000 rupees worth goods from him. I am handing over that check for that price of that goods to him. Then now he is the holder for value because he has given some consideration. Holder for value means there is some consideration happening. Otherwise, just a holder, anybody can hold, a thief can hold it. He is not a holder by value. He is not a holder for due course. He is not that. He is just holding that. Any person holding the check, he is the holder. Any person holding the bill, he is the holder. Biju sir. Biju sir.
Sir, with recourse, without recourse?
Which one? With recourse, without recourse. Okay. With recourse, suppose a check bill is given, bill bank is discounting, check is returned. What from where the bank can take the money? If he can take the money from the drawer, then it is the with recourse. With recourse means the drawer of the bill has a liability towards the factor or the financier or the banker. In case of return of the bill, amount is not paid on due date, he has to give the money to the bank or the financier or the guarantor or the factor. That is a with recourse. Without recourse means whether amount is paid by him or not, he don't have to worry. He don't have any further obligation to the factor, financier or the banker. That is without recourse. Without recourse is going back to the original person to whom the money has been given. The bank gives the money to the drawer of the bill. The money has to be paid the drawer of the bill. If the drawer of the bill is not making the payment to the bank on the due date, so in the case of with recourse, the bank can come back to the drawer of the bill and say, your bill I have discounted, but your drawer has returned that. He has not paid that on the due date. He refused to make the payment. Now you have to pay me the money. That is with recourse. In the other case, the financier cannot go back to the drawer. He can only go back to the drawee. He can force the drawee to pay. That is the without recourse. Biju sir.
What condition the contract of guarantee agreement or any deed become void, like example death of person and any other, what are the other conditions?
I cannot fully hear, sir. Hello.
Under what circumstances the agreement of contract of guarantee or any other deed become void, like example death of the person.
Okay. Void is starting itself. Void means if the object is not legal. So suppose I want to engage a person for selling opium. Opium is a banned drug. I cannot employ a person. Okay. So in that case, it is a void contract because the object is not valid. It should be legal. Anything I am telling a person, you go and beat that person, you break his leg, I will give you 10 lakh rupees. Okay. So it is a contract. I am giving contract killing. but it is a void contract. What is a contract? A valid contract? Anything which can be enforced through a court of law is a valid contract. Whether this contract can be enforced through the court, it is not possible. So that is a void contract for which the object is not valid. And there is another thing, void ab initio. From the starting itself, it is void. That is any agreement with the minor, an agreement ultra vires, which we have discussed. These are void ab initio. Then another one is valid. Valid means it is having all the essentials, free wills, everything is there, consideration, everything. It can be enforced through a court of law. And another one is the voidable contract. Voidable, two conditions. So one person has done without free will, he is aggrieved, some pressure put on him, or something at a gunpoint, or something he has forced to sign. So subsequently, he can say, I don't want to continue with the contract. He can make it voidable. Only the aggrieved party can make it voidable. The other condition is, earlier such was, everything was fine. But subsequently, due to certain act, for whatever the condition to be done as per that contract, that became impossible. Suppose one house is there, some building is there. You want to sell that building, or give that building on lease. The agreement has been done, but due to flood, that building itself is gone. Then how we can give on lease? Is it possible? That has become voidable subsequently. Originally it was valid, subsequently it has become void. That is the voidable contract. And there should be normally a consideration for that. Without a consideration, if it is charity or some other this family agreement and other thing, that is not a valid contract.
Notifying bank.
What?
Notifying bank.
LC, okay. LC, negotiating bank. What? I cannot say.
Notifying bank.
Notifying bank. Okay. See, normally in LC, which are the party? In LC, see, LC, who initiate? The applicant initiate. Applicant is the buyer. He initiate. The bank which issues the LC on behalf of the applicant buyer, that is the applicant bank, the issuing bank. The LC is issued by applicant's bank. The LC issuing bank is called the issuing bank. This LC issue is, if it is the party, it is an importer outside India, it has to be informed to that person by another bank. That bank is the advising bank, which advise the information to the other party, the beneficiary. So he is the advising bank. Then that person, that borrower, that beneficiary, he may sell this whatever goods it is there, transport that goods, and get the money. All the documents he will submit to the negotiating bank or notified bank. Notified bank means as per the loan documents, he can take the credit, he can get the money from which bank, that is called the notified bank. In the LC, it will mention you can take the money from so and so bank. That is a notified bank. He has to take the money from that bank on submission of all the document which is mentioned in the LC. So that is the notified bank. It can be negotiating bank. If specifically not mentioned, he will go to his bank and get. What is the negotiating bank? He is giving the money against the LC. And once the money is given to the LC and documents, everything fine, money will be given. Then this notified bank or the negotiating bank will send all the documents to the issuing bank. So issuing bank, then who has to pay the money? The applicant has to pay the money. The issuing bank will again verify all the documents. Then he will send the documents to the, if it is everything is fine, to the applicant. If it is a DP bill, that is the immediate payment, site bill, money has to be paid immediately. If it is an usance bill, say payable after 3 months, he will make the payment after 3 months. So after 3 months, on the due date, he has to give the money to the bank. Bank will remit to the notified bank or the negotiating bank. So with that, the transaction will be completed. If the applicant is not giving the money to the bank, then it is the duty of the bank, because it is a guarantee given by the bank undertaking. So if the customer does not pay, applicant does not pay, the issuing bank has to make the payment to the notifying bank. With that, it will be over. Suppose sometimes this notifying bank or the negotiating bank, they will say that I don't want money transferred to this account. I want some other account. He may say that America some account. He may say JP Morgan or American Express Bank. You credit, this is my account with there. You credit to that account. In that case, this bank, this issuing bank may ask his correspondent bank in America, he will remit that amount to that bank and ask him to credit to that person's account, notifying bank or that negotiating bank account. So that bank is called the reimbursing bank. Money, whatever paid, who has paid the money? The negotiating bank or the notified bank. So whatever money to be paid to already given by them has to be reimbursed. So they are called the reimbursing bank. In between, there can be another bank, which is the confirming bank. The beneficiary may say that the issuing bank is a small bank. I don't know what is the worthiness of that bank, how much I can trust that bank. So I want some bigger bank to confirm that. So if any other bank is confirming whatever LC issued by this issuing banker, that bank is called the confirming bank. They are additionally giving the confirmation. This bank has to undertaken that to make the payment. The other bank is also confirming to that. So with that, already 9:39, we have extended by
Sir, types of LC, sir. Back to back.
If because it is already 9:39, if which one
Okay,
you want to specifically ask, back to back LC is, see, against one LC, this LC has been issued by the issuing bank, he has issued a bank. Against that LC, another bank, that bank, the bank in that beneficiary's place, that they are issuing another LC in favor of another person against the strength of this LC. That is called the back-to-back LC. Against the strength of the original LC, another LC is issued. That is the back-to-back LC. This happens in places, suppose that the beneficiary is not the person who is supplying the goods. It is manufactured and done by some other supplier who has to manufacture that goods. For that, he needs some LC. LC is a credit facility. He needs some LC. In that case, back-to-back LC against this LC, original LC, another LC issued by another bank. That is the back-to-back LC. Transfer LC means this LC can be transferred. Original LC can be transferred. All the same details, with all the same details, except that person, it can be transferred to another person. Only once it can be transferred, and the person to whom it has been transferred, he cannot transfer again to another person. That is. So I think we will close here because continuously.
Yes, sir. Yes, close.
DRT അണ്ടറിൽ വരില്ല ഇതാണ് മോക്ക് ടെസ്റ്റിലെ ക്വസ്റ്റൻ ആണ്. DRTയുടെ അണ്ടറിൽ വരില്ല ഡെപ്റ്റ്സ് ഡ്യൂ ടു പ്രൊഫഷണൽ സെൽഫ് എംപ്ലോയ്ഡ് പേഴ്സൺസ് ഉണ്ട്, ഡെപ്റ്റ്സ് ഡ്യൂ ടു ദ സ്റ്റാഫ് ഓഫ് ദ ബാങ്ക് ഉണ്ട്. ഹലോ,
debt due to the staff of the bank. So debt, any fraud conducted by the staff of the bank, that you cannot file a case in the DRT. Okay. Staff has committed any fraud, that amount cannot be recovered through the DRT. Suppose.
ഇതിലെ ഓപ്ഷനിലുള്ളത് ഡെപ്റ്റ്സ് ഡ്യൂ ടു പ്രൊഫഷണൽ ആൻഡ് സെൽഫ് എംപ്ലോയ്ഡ് പേഴ്സൺസ് ആണുള്ളത്.
അത് എടുക്കുക. സെൽഫ് എംപ്ലോയ്ഡ് ആണെങ്കിൽ 20 lakhs ഉണ്ടെങ്കിൽ only see whatever the loan is given, whether it is self-employed, whether it is education loan, whatever the loan is there, if the outstanding dues is 20 lakhs and above, you can file, the bank can file a case to the bank, to the DRT. But if that amount is due to a fraud happening to the staff, that cannot be claimed from the through DRT. DRT, one benefit is that even if there is no security given to the bank, DRT can attach all the property, movable, immovable property, everything which belongs to the borrower guarantor, except the dress he is wearing, the bedding, that then his utensils. Other than that, everything can be attached by the DRT through the recovery certificate. Recovery officer will take everything and he can sell. Surface, there should be security available. Only if security is available, that security can be taken out and sold. DRT, even if no security given to the bank, if that person is having any movable or immovable property, that can be attached and sold through the recovery officer, through the recovery certificate.
Sorry, but the answer debts due to professional and self-employed persons.
അതിൽ എമൗണ്ട് എത്രയാണ്? ഇപ്പൊ 20 ലക്ഷം ആണെങ്കിൽ അതും പറ്റും. എനിക്ക് അതിനെപ്പറ്റി അഭിപ്രായം പറയാൻ പറ്റില്ല. 20 ലക്ഷം ആണെങ്കിൽ എനി ലോൺ it can be recovered. If it is a 5 lakhs angle, it cannot be recovered. If it is 18 lakhs, it cannot be done. If it is 20 lakhs, whether it is professionally or it is even leave it, loan you leave it, it is some wrong payment. The account has to be credited to the A's account, 20 lakhs. By mistake, it was credited to B's account. No loan given. This credit, instead of crediting to this person, that has been credited to the other person. In that case also, if that party is not making the payment, if that amount due is 20 lakhs and above, bank can file a case in the DRT. No loan given, but it is over payment by mistake. That can also be claimed through DRT. Okay.
Thank you, sir.
Okay, we will wind up. Thank you, friends. We have been here for.
Thank you very much.
Thank you, sir. Thank you.
Exam-oriented session.
Okay. Thank you
once again.
Thank you, sir.
Thank you, Biju sir. Good night to all. All the best. Score
all the
70
best to you
plus.
friends tomorrow.
70 plus mark you kindly score. Okay. Thank you.
So all the best from the whole IBS team. Yeah, from the whole IBS team, we wish you all the best for tomorrow and come out successful and be a junior associate tomorrow.
Thank you, sir.
So, sir, Ravindra sir, finally your wish also.
Okay. All the best. Take care. So you can definitely score, but only thing, you read the question well. Don't get confused. Maybe you know it. First question you read, first answer option. Oh, this is correct. You are able to connect with that. But the last option may be more right. You have to give the most appropriate answer. So that you should keep in mind. You have to go through all the 4 options given, then read the question well, read the answer well. Whatever option given, that also you read well. Then there is no negative mark. Answer all the questions. But don't leave anything. Don't leave any questions unattended, because you are not going to lose. You may get more marks only. Hello.
Time management. Yeah,
time management is very equal. But only thing you answer. You see, whatever it is, remaining question, last 5 minutes you just keep it for separately. Don't take the entire minute. 5 minutes you keep separately. Okay, last 5 minutes there are some 15 questions you are not able to attend. Don't again go on reading. You give the same answer. All the 15 A option, all the 15 B option, whatever you want to answer, give the same option. Don't even read that. Give the same option. All the 15 8 out of that 25% you may get. You may be able to score it. If you are leaving, you will not get a single mark. Here there is an option you are giving. So you do something, then only God will help you. God may give you marks on that. Unless and until you do your act, God will not help you. 15 questions, don't keep it on just last 2 minutes. You just tick, same thing, A only. What is the time required for that? See, there is a chance to get mark. You are not going to lose anything. Don't leave a single question unattended. Okay. All the best. Take care.
Yes, sir. Thank you.
Good night. Good night.
Thank you for the tips also, sir. Thank you very much.
Okay.
Thank you,
So
sir.
we are winding up the session.
Thank you, sir.
Okay.
Yeah, we are concluding this YouTube live also.